Good evening, everyone. In this video, I will be sharing with you a simple setup I have discovered on the USDCAD where I'm thinking of taking advantage of a selling momentum as we head into the first week of the new month. On the dollar time frame, if we look at what has been happening since the beginning of the year, we'll observe our price has been consolidating within the 1.3 area and 1.24 area in the last 5 to 6 months. And one thing I've come to observe is this. In the month of May, we saw our price rejected the 1.31 area, and the same thing happened during the mid week of last month. So with this scenario we have here, definitely we want to be identifying this area as a major supply zone, as we can see that every time price comes into this area, we see a selling momentum right from that area. In addition to that, we also need to take into consideration what happened throughout the month of June. As we can see, during the month of June, we saw our price initially went from 1.27 area to go into 1.25 before we saw that bullish momentum to the upside. And since on the 16th of June, we saw our price has been finding lower lows and lower highs, giving us a scenario that looks more like a reversal pattern that is setting a tone for a bearish momentum. So now what I want to be thinking out, what I'm going to be thinking here, what I'm thinking here on the USD card is this. Well, the I'm thinking price will probably go to the downside from this area, as we can see what has been happening from that region in the last couple of months. So how do we intend taking advantage of this bearish momentum if it finally happens during the new week? So scaling down to a much lower time frame, I would want to go down to the 2 hours time frame to see how price has been playing out in the last couple of weeks to now decide where to go from here. So let me do the 4 hours, I guess. 4 hours is most appropriate at this point. Okay. So here on the 4 hours time frame, what do we want to be doing? What do we want to be looking at? So the first thing I did here is to identify a key level, which was identified at around 1.29 area. And the reason why that is, if we look left, give me a moment. If we look left, we can see our price as respected, or how that level has been a major determinant of price action in the last 1 to 2 months. We can see around this area we saw our price became a resistant point before we saw the breakout of structure, and then became a demand zone here, a demand zone. Then we saw a breakdown of structure. Price came back to become a resistance, which is also a supply zone. And afterwards, we saw a breakout of structure, making this area a demand, then a break below of that structure, make this area a supply and a supply area. So with the information we have here, we can see that this area has been a major determinant of price action, and at the same time has been an area where seller niche has been identified by the participants in the market. So one thing I want to be looking out for is this. Looking at that impulse leg we identified here that began on the 8th of June, we saw our price move into the supply zone we identified on the daily time frame, and we saw something that looks like a reversal pattern in the form of a double top structure. We saw a breakdown of that structure, and price did a retest into structure, giving us a confirmation that we might be going to the downside in the early part of the month of July. So one thing I want to be looking out for here on the USD card is to take advantage of a selling momentum right below the key level at 1.29 area. So if we are going to be taking a selling opportunity here, where will our take profit target be? If we go back to the daily time frame here, as we can see the last time price respected that supply zone. We saw about how many pips move to the downside. We saw over close to 500 pips move to the downside. So we never can tell what's going to happen this month. We never can tell. So what are we going to be looking out for? Will price get this far? Well, that we can't know. So what I want to be doing here is this. In order not to be too over ambitious on this one, I would rather use the impulse leg here, and I'll look for my golden zone area to be my take profit target. And so what do I mean by my golden zone area? The golden zone area is the area between the 50 and the 78.6% of the previous impulse leg. So we can see that we have the previous impulse leg here, and it appears price is doing a retracement of that impulse leg. And I want to be looking at the golden zone area for my take profit target, at least for the meantime, after which we could now decide if price is going to go further down or probably continue to the upside. So let's bring out our Fibonacci retracement tool at this point and run it through the previous impulse leg. And one thing we're going to be having is this. So I want to be looking at between the 50 and the 78.6% of the previous impulse leg, which falls around this area. So let's have it around here. Let's delete the retracement tool and let's label this area our take profit target, CP target. So we give this a green, I guess, and let's make this yellow. Make it a little bit lighter. So, oh, let's place this right in the middle of. So we have something like this. So this is what I'm going to be looking out for, and which is going to give us. Let me see how much that is. We'll be having, I think, an approximately of between 100 to a maximum of, let's say, 200 thereabout to catch if price goes as expected. So if that is going to be the case at this point, then the next couple of weeks will now determine if we're still going to go further to the downside from this area, or probably price will reject this area, form a reversal pattern to push price to the upside. So we wait till that happens, but for the meantime, we want to be aiming at a take profit target within the 1.263 and the 1.28 area as we head into the new week. So, in addition to what I've said so far, the key level at 1.29 shall be my yardstick, as we want to be taking advantage of any selling momentum right below this level. And if we see price go back right above that key level, then we want to hold on and wait for price to come back down, do a retest of structure before we enter the trade to the downside. So this is going to be my scenario here on the USD Let's wait for the market to open and let's see how price action plays out during the first couple of hours in the week, and that will now determine where our entry point is going to be. Follow me on my TradingView account so that you don't miss out on the regular updates I normally share on in the comment section of my TradingView platform. Thank you for watching, and if this was a little bit helpful in helping you making your individual decision during the week, kindly follow me, like my video, and I'll be glad you did. Thank you very much and do have a wonderful night rest.